A tug of war is happening in the markets. Big swings are being made from gains and losses. Even a quiet day on Wall Street sees the Dow making triple-digit moves. Joining me now is David Nelson, the chief strategist at Belpointe. Hi, David. Thanks so much
Thanks
for
having me.
So the strong U.S. dollar took a big bite out of sales growth last quarter with Q1 earnings season just around the corner. Should investors brace themselves for a bigger, uglier impact from the stronger greenback?
I'm not sure, but we're gonna find out very quickly here because the quarter ends in a couple of days now. We're gonna start to get the pre-announcements, and we're gonna have a lot of companies fessing up. Did they still see the same headwinds that we saw earlier in the year? And it begs the question. You know, I came into the start of this year with maybe 7 to 10% growth for the S&P. Those numbers are being ratcheted down. Right now, current estimates for the S&P are probably about 123. Just a month ago, it was 125. So it looks like everybody's pushing everything out to the latter half of the year.
And when it comes to volatility and stock prices, the Office of Financial Research, a government agency tasked to promote financial stability, released a paper last week stating U.S. stock prices seem overpriced. Some valuations are nearing extreme highs. Would you agree with this assessment? And would it serve some investors to sit on the sidelines in cash until clearer direction is visible?
I'm not sure that overvalued is the right word. Certainly fairly valued is probably more accurate. It's hard for me to make a compelling case for the indices at this level, especially in light of the fact that some of these estimates are coming down. We had a kind of a negative durable goods number this morning coming in at minus 1.4%. The street was looking for a positive number. The dollar is all part of that. I'm still able to find the names that I need to own for my investors, but that list keeps getting smaller. And there's always some overvalued stocks in the market, and you have to dig a lot deeper now.
So you do have to dig a lot deeper. So for those investors who aren't professionals, right, should they, think maybe I'll take a breather right now and get in a little bit when the markets settle?
The problem is that investors will wait for the correction. I guarantee you that if the market corrects 5%, people are going to start to think, well, it's going to be 10%, and they're not going to get in. And chances are they won't get back in until we're at another all-time high. That's generally how retail behavior takes place. And frankly, a lot of professionals make the same mistake as well. So you have to have some kind of discipline out there. If you really want to try to time the market, there are tactical strategies out there, firms out there doing this on a professional level. Do it that way.
And American staples, mac and cheese and ketchup, they're joining together with the merger of Kraft and Heinz. Where else do you see consolidation happening right now?
Probably another place we should be looking at is retail. How many different teen retailers do we need? I mean, how different are the jeans at Aeropostale from Abercrombie and Finch? Any number of home goods stores. I would expect in that space, especially with a consumer that seems to be all powerful, especially moving to the internet, a lot of these stores are going to have to combine and create some synergies.
Great. Thank you so much for sharing your insight with us today.
Thanks for having me.
David Nelson is the chief strategist at Belpointe, and I'm Susanna Lee for The Street.